Have you ever wondered why some people are able to maintain their wealth while others find it difficult to advance financially? It is about what they avoid, not just about making more money. Many of the unwritten rules that millionaires follow to maintain their wealth growth center on avoiding typical financial traps. From avoiding excessive debt to preventing impulsive spending, the behaviors they avoid are equally as important as those they adopt. Wondering what secrets they are hiding, let us examine the 7 things that millionaires steer clear of in order to maintain their competitive edge and financial stability. In order to set themselves apart from others, millionaires frequently adopt frugal spending practices that put long-term financial gain ahead of immediate satisfaction. They avoid excessive spending on luxury items or status symbols that do not provide real value or contribute to wealth accumulation. While it might be tempting to purchase expensive cars, designer clothes, or lavish vacations, many millionaires focus on maintaining a frugal lifestyle, especially in the early stages of wealth building. This doesn't mean they deprive themselves entirely, but rather that they make deliberate choices about how and where to allocate their resources. For example, some millionaires choose to live in modest homes, drive practical vehicles, or even avoid frequenting high-end restaurants unless the occasion truly warrants it. They understand that every dollar spent frivolously is a dollar that could have been invested or saved to grow their wealth further. By resisting the urge to keep up with the Joneses, they sidestep the financial traps of conspicuous consumption that often lead others into debt or financial instability. The idea that someone can spend carelessly after becoming wealthy is a frequent misunderstanding. Many millionaires, nevertheless, continue to follow the same routines that first enabled them to accumulate their wealth. They recognize that wealth can be fleeting if not managed carefully. This disciplined approach extends beyond personal spending to their professional lives. For instance, they scrutinize business expenses, negotiate better deals, and avoid overspending on ventures that don't align with their financial goals. Millionaires are clever about separating needs from wants, in addition to living within their means. They practice delayed gratification, understanding that sacrificing certain comforts today can lead to greater rewards tomorrow. This mindset often helps them stay focused on the bigger picture, ensuring that their spending habits align with their long-term financial objectives. Even when indulging in luxury, they are likely to do so after securing a solid financial foundation rather than compromising it. And millionaires are more concerned with quality than quantity. They make long-term investments in high-quality, long-lasting products that provide higher value over time, rather than rash purchases. This perspective helps them avoid the waste and recurring costs associated with cheaper, lower-quality alternatives. They may also leverage their purchasing power by seeking discounts, using cashback opportunities, or waiting for sales, demonstrating that wealth doesn't equate to careless spending. Their commitment to avoiding excessive spending also reflects a deeper understanding of opportunity cost. Every dollar spent on non-essential items represents an opportunity lost to invest that money elsewhere, such as in stocks, real estate, or a business venture. By consistently prioritizing investments over consumption, millionaires ensure that their money works for them, generating additional income and compounding their wealth over time. Ultimately, this disciplined approach to spending is rooted in a mindset that values financial security and freedom over the temporary satisfaction of material possessions. It's not just about avoiding excessive spending, but also about cultivating habits and attitudes that support sustainable wealth building. This long-term perspective is one of the key reasons millionaires remain financially successful, even in the face of economic challenges or personal setbacks. Millionaires understand the detrimental effects of mismanaging debt and take deliberate steps to avoid falling into financial traps associated with high-interest obligations. Debt, when used improperly, can erode wealth and limit financial flexibility, which is why the wealthy are cautious about how they approach it. They recognize the difference between good debt and bad debt, and make conscious choices to use borrowing as a tool for growth rather than a liability that drains resources. Bad debt, such as credit card balances, payday loans, or personal loans with high interest rates, is something millionaires avoid at all costs. These types of debt often accumulate quickly, creating a cycle of repayment that can make it difficult to break free. The wealthy prioritize paying off such obligations as quickly as possible, understanding that interest payments on bad debt represent money that could have been invested or saved for future opportunities. Instead of relying on credit for everyday purchases or luxury items, they plan their expenses and ensure they live within their means to prevent falling into the debt trap. On the other hand, millionaires recognize that some forms of debt, often referred to as good debt, can be leveraged to their advantage. This might include mortgages on investment properties, loans to fund businesses, or financing for education that enhances earning potential. Even in these situations, they are meticulous about the terms of the debt, ensuring that the interest rates and repayment schedules align with their financial strategies. They carefully assess the potential returns from taking on debt and ensure that the risk is manageable before committing to it. By maintaining this disciplined approach, they ensure that borrowed funds contribute to wealth creation rather than eroding it. Another important practice among millionaires is their proactive approach to managing existing debt. They often employ strategies to minimize interest payments, such as refinancing loans, consolidating debts at lower interest rates, or negotiating better terms with creditors. By staying on top of their financial obligations, they avoid the stress and financial strain that often accompany unmanaged debt. This proactive mindset allows them to maintain a strong credit score, which in turn provides access to better borrowing opportunities when needed. Millionaires are also highly intentional about when and how they use credit cards. While they may have multiple cards to take advantage of perks, cashback, or travel rewards, they rarely carry balances from month to month. Paying off the full balance each month is a common practice, allowing them to benefit from the convenience and rewards of credit cards without incurring interest charges. This discipline ensures that their use of credit aligns with their broader financial goals rather than becoming a source of unnecessary expense. The wealthy also tend to avoid co-signing loans or taking on debt on behalf of others unless it is part of a well-considered financial plan. They understand that assuming responsibility for someone else's financial obligations can jeopardize their own stability if the borrower defaults. This cautious approach extends to personal guarantees for business ventures or investments, where they carefully evaluate the potential risks and rewards before committing. Millionaires often build substantial emergency funds and maintain liquidity to ensure that they do not need to rely on high-interest borrowing in times of need. This financial cushion acts as a safeguard against unexpected expenses, such as medical bills or sudden economic downturns, reducing the likelihood of needing to take on unfavorable debt. By planning for the unexpected, they create a financial buffer that protects their wealth and allows them to focus on long-term growth. Their careful approach to debt reflects a broader philosophy of financial responsibility and strategic decision-making. Millionaires view debt not as a convenience or a crutch, but as a tool that must be wielded with precision and purpose. This perspective enables them to avoid the pitfalls of mismanaged debt, ensuring that their financial resources are directed toward opportunities that enhance their wealth and secure their financial future. By prioritizing discipline, foresight, and a clear understanding of the consequences of borrowing, millionaires create a foundation for lasting success. Millionaires prioritize financial education as a cornerstone of their wealth-building journey and understand that neglecting this critical area can lead to poor decision-making and missed opportunities. They actively seek to improve their knowledge of personal finance, investment strategies, and market trends, recognizing that financial literacy is an essential tool for maintaining and growing wealth. Rather than relying solely on financial advisors or external experts, they take ownership of their financial decisions by equipping themselves with the knowledge needed to make informed choices. One key reason millionaires place such importance on financial education is the understanding that the financial world is complex and constantly evolving. From changes in tax laws to fluctuations in the stock market, staying informed allows them to adapt their strategies and capitalize on opportunities as they arise. They dedicate time to reading books, attending seminars, listening to podcasts, and following reputable financial news sources. By doing so, they develop a comprehensive understanding of topics like asset allocation, risk management, and the principles of compounding, all of which are vital for building and sustaining wealth. Additionally, millionaires often cultivate a habit of learning from their own financial experiences, both successes and failures. They view mistakes not as setbacks, but as valuable lessons that inform their future decisions. For instance, a poor investment or a missed opportunity might prompt them to delve deeper into the factors that contributed to the outcome, enabling them to refine their strategies and avoid repeating the same errors. This willingness to learn from experience underscores their commitment to continuous improvement in their financial acumen. Millionaires also recognize the importance of understanding the tax implications of their financial decisions. They educate themselves about the tax code and work with professionals to optimize their tax strategies. This might involve leveraging deductions, maximizing contributions to tax-advantaged accounts, or structuring investments to minimize taxable income. By staying informed about tax planning, they retain more of their earnings and direct those savings toward growing their wealth. Another aspect of financial education that millionaires prioritize is understanding various investment vehicles and opportunities. They are not content with simply depositing money into a savings account or relying on a single investment strategy. Instead, they explore a diverse range of options, including stocks, bonds, real estate, mutual funds, exchange-traded funds, ETFs, and alternative investments like private equity or venture capital. By educating themselves about the risks and rewards associated with each type of investment, they are better equipped to construct a balanced and diversified portfolio that aligns with their financial goals and risk tolerance. Financial education also extends to understanding economic and global trends that can influence markets and investment opportunities. Millionaires pay attention to factors such as inflation rates, interest rate changes, geopolitical events, and technological advancements, all of which can have significant implications for their financial strategies. Staying informed about these trends allows them to anticipate shifts in the market and position themselves to take advantage of emerging opportunities. Furthermore, millionaires often emphasize the importance of educating themselves about personal budgeting and expense management. They develop a clear understanding of their income and expenses, ensuring that they live below their means and allocate a significant portion of their earnings to savings and investments. This disciplined approach to budgeting not only helps them avoid financial pitfalls, but also reinforces their commitment to achieving long-term financial security. In addition to their own learning, many millionaires make it a point to educate those around them, including family members and employees. They understand that building a financially literate network can contribute to shared success and reduce the risk of poor financial decisions that might affect their broader circle. For example, they might teach their children about the value of money, the importance of saving, and the basics of investing, ensuring that the next generation is equipped with the tools to sustain and grow the family's wealth. Ultimately, financial education is not a one-time endeavor for millionaires, but a lifelong commitment. They approach learning as an ongoing process, continually seeking to deepen their understanding and adapt to new challenges and opportunities. This dedication to financial literacy not only helps them make better decisions, but also gives them the confidence and autonomy to navigate the complexities of wealth management. By valuing and prioritizing financial education, millionaires create a solid foundation for enduring financial success. Millionaires distinguish themselves by their ability to think independently and avoid following the crowd, particularly when it comes to financial decisions. They recognize that herd mentality, where individuals make choices based on what others are doing rather than on their own research or understanding, can lead to poor outcomes. This tendency to move with the crowd often results in decisions driven by fear, greed, or social pressure, which can derail even the best financial plans. Millionaires consciously resist this impulse and instead rely on a disciplined, well-informed approach to decision-making. One of the most common areas where the crowd mentality manifests is in investing. Many people are drawn to trends, chasing the latest hot stock, cryptocurrency, or investment fad without fully understanding the risks involved. Millionaires take a different approach. They conduct thorough research, analyze market conditions, and assess the fundamentals of an investment before committing their money. They understand that just because an investment is popular doesn't mean it's a sound financial choice. This disciplined mindset allows them to avoid speculative bubbles and the financial losses that often follow when such bubbles burst. Millionaires also avoid panic selling during market downturns, a behavior often driven by herd mentality. When markets become volatile, it's common for investors to react emotionally, selling off assets in fear of further losses. However, the wealthy recognize that market fluctuations are a normal part of investing and often view downturns as opportunities to acquire undervalued assets. By staying calm and sticking to their long-term strategies, they position themselves to benefit when the market rebounds, while others who followed the crowd may have already exited at a loss. This independent thinking extends beyond investing to other aspects of financial life. For example, millionaires often avoid making major purchases or lifestyle changes simply to fit in or impress others. They are less concerned with appearances and more focused on aligning their spending with their values and goals. This mindset helps them avoid the trap of lifestyle inflation, where increased earnings lead to increased spending in an attempt to maintain a certain image or keep up with peers. Instead, they make financial decisions based on their own priorities, not on societal expectations or the behaviors of those around them. When it comes to business decisions, millionaires also resist the temptation to follow popular trends without careful consideration. Just because a particular industry or business model is gaining widespread attention doesn't mean it's the right opportunity for them. They evaluate potential ventures based on their own expertise, market research, and risk tolerance rather than jumping on the bandwagon. This deliberate approach helps them identify opportunities that align with their strengths and have a higher likelihood of success, rather than getting caught up in fleeting trends. Another reason millionaires avoid following the crowd is their recognition of the importance of timing. They understand that by the time an opportunity has become widely recognized, much of the potential for profit may already be gone. Early adopters of successful ventures or investments often see the greatest returns, while those who join later, motivated by the actions of the crowd, may face diminishing rewards or increased risk. This insight drives millionaires to seek out undervalued or overlooked opportunities, often placing them ahead of the curve. Millionaires also avoid crowd mentality when it comes to financial advice. While they may consult with experts and seek guidance from trusted sources, they are cautious about blindly accepting advice that is popular or widely promoted. They take the time to understand the rationale behind recommendations, ensuring that the advice aligns with their unique financial situation and goals. This critical thinking helps them avoid costly mistakes and ensures that their decisions are rooted in sound reasoning rather than popular opinion. Resisting the crowd requires confidence and self-discipline, qualities that millionaires develop over time. They cultivate a mindset that prioritizes long-term success over short-term validation and are willing to make decisions that may seem unconventional or unpopular in the moment. This confidence allows them to stay true to their own strategies, even when others doubt their choices or pressure them to conform. Ultimately, millionaires understand that the crowd is often wrong, especially in matters of finance and investing. By choosing to think independently and base their decisions on careful analysis and strategic planning, they set themselves apart from those who let emotions or social pressure dictate their actions. This ability to go against the grain, combined with a commitment to their own principles and goals, plays a significant role in their financial success and resilience. Procrastination is one of the most significant obstacles to financial success, and millionaires understand that delaying action can lead to missed opportunities and long-term setbacks. They actively avoid procrastination by developing habits that encourage decisiveness and timely execution, ensuring they stay on track to achieve their financial goals. This mindset applies to every aspect of their financial lives, from saving and investing to business ventures and personal growth. By recognizing the high cost of delay, they cultivate a proactive approach that keeps them ahead of the curve. When it comes to saving and investing, millionaires understand the importance of starting early. They know that time is one of the most powerful factors in wealth building due to the effects of compounding. Every year of delay in starting a savings or investment plan represents lost potential growth, and millionaires are determined not to let procrastination rob them of these opportunities. By taking action early, they maximize their ability to grow wealth over time, even if they start with relatively modest amounts. They also establish automated systems to ensure regular contributions to savings and investment accounts, removing the temptation to delay or skip payments. Millionaires also avoid procrastination in addressing financial risks and challenges. They understand that putting off important tasks, such as creating a budget, reviewing expenses, or establishing an emergency fund, can leave them vulnerable to unexpected setbacks. Instead of waiting for a crisis to force them into action, they take preventative measures to protect their financial stability. For example, they prioritize tasks like purchasing adequate insurance coverage, creating a will or estate plan, and paying down high-interest debt. By addressing these issues promptly, they reduce uncertainty and position themselves to handle challenges with confidence. In the realm of business, procrastination can be especially costly, and millionaires are keenly aware of this. They take decisive action when opportunities arise, recognizing that waiting too long can result in lost market share, increased competition, or changing conditions that make an opportunity less viable. They don't wait for the perfect time or ideal circumstances, understanding that such conditions rarely exist. Instead, they focus on taking calculated risks and refining their strategies as they go. This willingness to act quickly often gives them a competitive edge and allows them to capitalize on opportunities that others miss. Millionaires also avoid procrastination when it comes to learning and personal development. They understand that building wealth requires not only financial capital, but also intellectual and social capital. Delaying the acquisition of new skills, knowledge, or connections can limit their ability to seize opportunities or adapt to changing circumstances. To counter this, they make continuous learning a priority, whether it's through reading books, attending seminars, networking with peers, or seeking mentorship. They approach personal growth with the same urgency and commitment as their financial goals, knowing that their ability to succeed depends on staying informed and prepared. Another way millionaires combat procrastination is by breaking down large tasks or goals into manageable steps. They understand that feelings of overwhelm can lead to inaction, so they focus on making consistent progress, even if it's incremental. For example, instead of waiting until they have a significant lump sum to invest, they start with smaller contributions and build from there. Similarly, they tackle complex projects by dividing them into smaller, actionable tasks, ensuring steady progress toward their objectives. This approach not only makes their goals feel more achievable, but also creates momentum that keeps them moving forward. Millionaires are also adept at prioritizing their time and energy to avoid distractions that can lead to procrastination. They recognize the value of focus and make a conscious effort to eliminate activities that do not align with their goals. This might involve delegating tasks, saying no to unproductive commitments, or setting clear boundaries to protect their time. By creating an environment that supports productivity, they reduce the likelihood of delaying important actions. Additionally, millionaires understand the psychological aspects of procrastination and take steps to overcome it. They acknowledge that fear of failure, perfectionism, or uncertainty can be barriers to taking action, and they work to reframe these challenges as opportunities for growth. For instance, they view mistakes as valuable learning experiences rather than reasons to avoid action. This mindset helps them push through hesitation and take the necessary steps to move forward, even in the face of uncertainty. Procrastination also affects interpersonal relationships and networking opportunities, and millionaires are careful not to let delays damage their connections. They respond promptly to emails, follow up on introductions, and maintain consistent communication with their networks. By acting with urgency and respect for others' time, they build strong relationships that can lead to future collaborations, partnerships, or opportunities. Ultimately, millionaires understand that time is their most valuable resource and that every moment spent procrastinating is a moment lost. By developing habits and strategies to overcome procrastination, they ensure that they remain proactive and focused on achieving their goals. This commitment to timely action is a key factor in their ability to build and sustain wealth, demonstrating that success often comes not from waiting for the perfect moment, but from taking decisive steps toward progress. Millionaires understand the inherent risks of relying on a single source of income and actively work to diversify their revenue streams. They know that depending solely on one job, business, or investment can leave them vulnerable to economic downturns, unexpected disruptions, or personal setbacks. To mitigate these risks, they develop multiple income sources that provide stability and growth, ensuring they remain financially secure even if one stream is compromised. One of the primary ways millionaires diversify their income is through investments. They allocate a portion of their wealth to assets that generate passive income, such as dividend-paying stocks, bonds, or real estate. Dividend stocks provide regular payouts, creating a steady stream of income without requiring the millionaire to sell the underlying asset. Similarly, bonds offer interest payments over time, providing predictable returns. These investment vehicles allow millionaires to grow their wealth while simultaneously generating income that supports their lifestyle or further investments. Real estate is another popular avenue for diversifying income among millionaires. By investing in rental properties, they create a source of recurring cash flow from tenants. This income stream can be particularly attractive because it often increases over time as property values and rental rates rise. Additionally, real estate provides opportunities for tax advantages and long-term appreciation, making it a cornerstone of many wealthy individuals' financial strategies. Some millionaires also explore commercial real estate, such as office spaces, retail centers, or warehouses, which can offer even greater income potential depending on market conditions. Entrepreneurship is another critical component of income diversification for millionaires. Many wealthy individuals own multiple businesses or invest in ventures that align with their expertise and interests. These businesses may operate in entirely different industries, reducing the risk of financial instability if one sector experiences a downturn. By owning or partially owning various companies, millionaires generate additional streams of income that complement their other investments and earnings. In addition to traditional business ventures, millionaires often explore alternative income sources such as royalties, licensing agreements, or intellectual property. For example, an author might earn royalties from book sales, while a patent holder might generate income from licensing their invention to manufacturers. These types of revenue streams can be particularly attractive because they often require minimal ongoing effort once the initial work has been completed. Many millionaires also diversify their income through side hustles or passion projects that have the potential to become profitable. These activities might include consulting, public speaking, or creating online courses in their areas of expertise. By leveraging their skills and knowledge, they create additional revenue streams that are both fulfilling and financially rewarding. Furthermore, these endeavors often serve as opportunities for personal branding, networking, and professional growth. Another strategy millionaires use to diversify their income is investing in startups or private equity. By providing capital to promising companies in exchange for equity, they position themselves to earn substantial returns if the businesses succeed. While these investments carry a higher level of risk compared to traditional assets, the potential rewards can be significant. Millionaires mitigate this risk by conducting thorough due diligence, diversifying their investments across multiple startups, and leveraging their experience to provide guidance to the businesses they support. Passive income sources are also a significant focus for millionaires seeking diversification. Beyond real estate and dividends, they may invest in peer-to-peer lending platforms, income-generating websites, or automated e-commerce stores. These ventures require an initial investment of time and money, but can produce consistent revenue with minimal ongoing involvement. This approach allows millionaires to maximize their earning potential without becoming overburdened by active management responsibilities. Another key component of income diversification is ensuring that earnings come from both domestic and international sources. Millionaires often invest in global markets to reduce their exposure to the economic conditions of a single country. By spreading their investments across various regions and currencies, they protect themselves from localized economic fluctuations and geopolitical risks. This global perspective not only enhances income stability, but also provides access to opportunities that may not exist in their home markets. Furthermore, millionaires recognize the importance of building and maintaining a strong professional network to discover and access new income opportunities. By surrounding themselves with like-minded individuals, they often learn about emerging industries, investment prospects, or partnerships that can lead to additional revenue streams. They view their network as an invaluable resource for expanding their financial portfolio and staying informed about trends and innovations. Ultimately, the practice of diversifying income reflects a broader philosophy of risk management and long-term planning. Millionaires understand that relying on a single source of income is akin to putting all their eggs in one basket, a strategy that leaves them vulnerable to unforeseen circumstances. By creating multiple revenue streams, they not only safeguard their financial security, but also position themselves to capitalize on opportunities and weather economic storms. This proactive approach to income diversification is a cornerstone of their financial success, providing both stability and growth over time. Millionaires understand the importance of maintaining a healthy relationship with money, and they avoid the emotional pitfalls that can lead to poor financial decisions. They recognize that viewing money through the lens of guilt, fear, or greed often results in behaviors that undermine long-term success. Instead, they cultivate a balanced and intentional approach to managing their wealth, seeing money as a tool to achieve their goals, create opportunities, and enhance their quality of life. One common emotional trap that millionaires avoid is the tendency to associate money with self-worth. They understand that their value as individuals is not tied to the size of their bank accounts or the material possessions they own. This perspective allows them to make financial decisions based on logic and strategy rather than the need to impress others or prove their success. By rejecting the notion that more money equals more worth, they free themselves from the pressures of excessive spending or reckless investments driven by ego. Fear is another emotion that millionaires manage carefully in their financial lives. Fear of loss, failure, or uncertainty can paralyze decision-making and prevent individuals from taking necessary risks to grow their wealth. Millionaires confront this fear by educating themselves about their options, seeking expert advice when needed, and focusing on long-term strategies. For example, they may invest in a diversified portfolio to mitigate risk, ensuring they are not overly exposed to the volatility of any single asset. By addressing fear with knowledge and preparation, they make calculated decisions that balance risk and reward. Guilt is another emotional barrier that millionaires avoid, particularly when it comes to enjoying their wealth. They understand that it is possible to be financially successful without feeling guilty about their achievements. This mindset allows them to indulge in luxuries or experiences that align with their values, such as travel, philanthropy, or high-quality goods, without compromising their financial principles. By managing guilt, they strike a balance between enjoying their wealth and continuing to build it for the future. Additionally, millionaires stay away from the opposite extreme, becoming overly attached to money in a way that fosters greed or hoarding. While they are disciplined in their spending and saving habits, they recognize that money is a means to an end, not an end in itself. This perspective prevents them from becoming consumed by the pursuit of wealth at the expense of their relationships, health, or personal fulfillment. Instead, they focus on using their resources to create positive impacts, whether through supporting their families, giving to charitable causes, or investing in ventures that align with their passions. A key aspect of maintaining a healthy relationship with money is developing a mindset of abundance rather than scarcity. Millionaires view money as a renewable resource that can be generated, invested, and multiplied over time. This perspective helps them avoid the stress and anxiety that often come from worrying about money. Instead of fixating on what they lack, they focus on opportunities to create and grow wealth, cultivating a sense of optimism and empowerment. Another way millionaires foster a positive relationship with money is by setting clear financial goals and aligning their actions with those objectives. They understand that money is most effective when it is used intentionally, whether to fund a business, support a cause, or secure their future. By maintaining clarity about their priorities, they avoid impulsive decisions or behaviors driven by fleeting emotions. This intentionality ensures that their financial choices reflect their values and long-term vision. Millionaires also make it a point to separate their emotions from their financial decisions, particularly when it comes to investing. Emotional reactions, such as panic during market downturns or overexcitement during speculative bubbles, can lead to significant financial losses. They approach investing with discipline, adhering to their strategies even when market conditions are volatile. By staying focused on data and analysis rather than emotion, they position themselves to achieve steady, long-term growth. Another important element of a healthy relationship with money is the ability to embrace generosity. Millionaires understand that money can be a powerful force for good and often use their resources to support charitable causes, help loved ones, or invest in their communities. This willingness to share their wealth not only creates a sense of fulfillment, but also strengthens their relationships and reputation. Generosity, in turn, fosters a mindset of abundance, reinforcing the belief that giving and receiving are part of a virtuous cycle. Millionaires also prioritize financial boundaries, recognizing that their wealth can attract requests or pressures from others. They avoid the stress of overcommitting by setting limits on how much they are willing to give or lend, and ensuring that these decisions align with their values and financial goals. By maintaining clear boundaries, they protect their resources and relationships, preventing money from becoming a source of conflict or resentment. Finally, millionaires practice gratitude and mindfulness in their financial lives. They take time to appreciate what they have achieved and remain grounded in their values, even as their wealth grows. This attitude helps them maintain perspective, avoid entitlement, and stay focused on the purpose of their financial success. By cultivating gratitude, they find joy and satisfaction in the journey of building wealth, rather than constantly striving for more. By avoiding unhealthy relationships with money, millionaires create a foundation for financial stability, personal fulfillment, and long-term success. They see money not as an emotional burden, but as a powerful tool to shape their lives and contribute to the world in meaningful ways. This balanced approach enables them to make thoughtful decisions, enjoy their achievements, and sustain their wealth over time. Building wealth isn't just about making money, it's about avoiding the traps that drain it and embracing the habits that grow it. By steering clear of these 7 pitfalls, you can start thinking like a millionaire and set yourself on a path to financial freedom. Remember, success starts with small, intentional choices every day. If you found this valuable and want more insights to help you achieve your goals, don't forget to like this video, share it with someone who needs it, and subscribe to our channel for more tips, strategies, and inspiration. Hit the bell icon so you never miss an update. We're here to guide you every step of the way on your journey to success. See you in the next video.